Hi, it's Marco here. Unless you've been living under a rock, you would know about the war in Ukraine. And with the war, obviously, there are lots of bad things. There are people losing lives, lots of bad things, but also opportunities from a stock point of view. Companies become cheaper. And in this video, I'm going to talk to you about 4 picks that I believe are the very definition of investing in safety. So let's start with the first one, which is Apple. And the reason why Apple is an absolute stock that it can be just seen as safety is because of buybacks. And if you are new to buybacks, let me just show you how much as Apple actually invested into itself, basically into the whole company. So since August 2018, when Apple first hit 1 trillion value, its stock is up 252%. That is from just August 2018. And the result, the disparity, is the direct result of a buyback program. So the company, and now I'm going to explain you what a buyback is basically, is when the company uses the cash reserves to buy back their own shares. And this is very important because it kind of secures some kind of profit for all investors like myself and you. And cash could be used for that, to buy their own shares, and basically pumping their own share price is a way for investors to have a return no matter what. If the market goes down, well, Apple should go down less. And that's the reason, because they're gonna use their cash to prop up their own share price. Cash can also be used as a dividend, and guess what? Apple has got a dividend, and it's not big, but it's nothing shy of something nice. It's something that you can rely on because they've been paying it over and over again. They are one of the dividend kings, as it were, because they've been just paying it no matter crisis, no matter market crashes. They've also been paying it. Also, very important, this is more of an overview of Apple, by the way, and also for the other stocks. We are going to dive deeper into these stocks in other videos, by the way. If you are interested, let's just subscribe to this channel. The next one is that Apple is also a company that is the biggest company in the stock market. And so where the market goes, it's going to be also where Apple goes, because the two of them are intertwined, as it were. And when you buy an ETF, well, chances are that you're buying a ginormous amount of Apple as well. And even if you are then a passive investor just buying ETFs, well, you are pumping Apple more than any other stock, especially if you're buying the S&P 500. So that's the first stock. The second thing that I wanted to tell you is not really a stock, but it's that if you join GEMINI today, and it's just a crypto broker where you can buy stable coins, and if you join using the link in the description below, you would get $10 when you buy or sell $100 worth of Bitcoin. But using GEMINI, you can actually get 8% value, 8% profit interest on your stable coins. And that is a way to avoid risk altogether. You're not even buying stocks, you're literally just getting profit out of the money, out of the stable coins that you have on GEMINI. But now let's move on to the second stock that is incredibly stable, and the next one is Nvidia. It's a company that I've been telling you about for a little while now, and I think has got a lot of things going on for them. The first one is the growing revenue. So as a company, it really has basically booming revenues, and it's obviously profitable. So you're not just investing into some kind of startup. It's a company that is growing a lot and gaining market share. So you have both the profitability and growing revenues. Also, they're producing a lot of cash, which is very positive, and they're not diluting their stock, their shares anymore, meaning they don't have to dilute us investors, because obviously I'm invested in Nvidia myself, and I'm gonna make more videos on Nvidia as well. Or you have to subscribe, basically, that's what I'm saying. Another important thing about Nvidia is that the whole industry is growing, and that is very bullish. Even if you think that, for example, Nvidia might have some issues, but when the whole industry is growing, all the companies in that industry, so that includes, for example, AMD and other companies that are in that industry, well, they're all lifted, they all increase their revenues, they will become more and more profitable, and so that's a way to be sure that this company, Nvidia, will not go bust. And again, all these companies that I'm telling you about in this video are long-term hold, because you know we have inflation that I've told you about so much, guys. It's not gonna be news for you, because you know that inflation has an impact on all stocks. But in this video we are looking at very stable stocks, and they will be good, they will be okay in the long run, 5 to 10 years. Moving on to the next two stocks. Yes, at this time I want to talk to you about two stocks, not just one, and they are very incredibly stable, and these ones are Bank of America and JP Morgan. Oh guys, I know what you're gonna say in the comments. You're gonna say, we don't like the banks, we hate the banks, we think the banks are absolute crap. Well, I have to kind of agree with you, but also I want you to know that the banks are a superpower. They are not just obviously like has got some kind of total supremacy on their sector. Bank of America and JP Morgan are the biggest banks on the planet. Sometimes, most of the time, are actually even bigger, and they have more cash and assets than whole countries. For example, I'm Italian, as you might have been able to understand from the way I talk. Basically, they have more money than the Bank of Italy. That's just to tell you how much money they have. So they have a lot of power, and they can also buy stocks. They have multiple ways to make revenues. So when the market crashes and the dividend yield of bonds goes up, well, they can still make a lot of money, because they lend money out of to people like me and businesses, and they can make even more money by lending money out. So even in inflationary times, they can be incredibly strong, and definitely never go bust for this kind of, obviously, for this kind of problem. If there are scandals, well, that's another thing. Another important factor that the bank have got is the amount of cash they have. And I'm not talking about just normal reserves that are keeping there, obviously, to lend out. It's literally the cash that is being produced by the profits that these companies are just churning out. They're just machines, and they're so able to produce cash flow. They can employ ginormous amount of these cash flows to pull themselves out of a problem if they fall in it. If, for example, they fall behind in terms of technology, well, they can throw money at it, and you know you're gonna solve it. They can never basically go bust. They have most of the cash that is on the planet, so why would you even bet against them? Better to join them. And they also pay a dividend. Both of them, I think Bank of America pays a higher dividend, or maybe it's JP Morgan, I can't remember, but both of them pay a dividend, and that's not bad. Also buybacks for them. And I'm gonna move on to the fourth company that we're gonna look at in this video, and that is Google. Google is a very strong company for one reason, and one reason only: total monopoly on web search. And basically, who else is not using Google these days? You're watching this video on YouTube, and that's owned by Google. It's also, and this is the most important thing, they're making so much money out of advertising, because people just use Google for absolutely everything. If you want to look something up on the internet, chances are you're using Chrome, and Chrome is owned by Google. So everything goes through Google. And where we saw some issues, for example, I'm just gonna make a quick comparison with Facebook. Facebook has got basically cut down by Apple. And so we saw a conflict between Apple and Facebook, where actually Facebook, basically, we can say that at the time of recording, Facebook is losing the game. But Facebook is not like Google. Google has been able to survive and to actually prosper with Apple. And so use the link in the description below. Other than that, thank you for watching. I'll see you in my next video.